therewith using unused capacity. Now that is at a micro level, at the portfolio level of real estate parties, that has an economic effect, because they will receive real income from these garages. The ESG plays out at a city level. So if you look at a city, for example, Amsterdam, and it's a relatively small city, as you may know, about 700,000 people. We have over 110 locations open there. That means a network which is denser than anything which has been comparable so far. And there are two aspects then which are important for this audience and this discussion. I mean, one is the freeing up of space. Getting cars away from streets allows cities to reduce the number of spots on street more quickly and replace that with much more palatable uses like trees, playgrounds, and with that climate adaptation uses. The other big issue is EV, and EVs need to be charged. And if you live in the city, that is a hassle. And the charger is always taken by the neighbor and the one who never places his car elsewhere after he's charged. I think most people know that problem. What we are looking to do is to target city inhabitants and invite them to charge their cars near their homes overnight in our garages. And so that will have a major impact on EV ownership, we imagine, and also therewith on the cleaner use, the cleaner transport of cities. So those are the two main points. There are others, but for this discussion, I think
no, that's good.
that works.
I'll pick up on some of those because it'd be interesting just to see how much of an impact that's actually having in cities, because I know you're active in both in the Netherlands, but it'd be interesting to pick that up. So I just wanted to come to you because Commerz, I think, was one of the first to set up an impact fund.
Yes.
So maybe just run through that. I think would be interesting. What the thought process was behind that, how that differs, I suppose, from some of the other funds that are also focused on ESG, for example.
Yeah, sure. So as an investment manager, we always have to come up with some new products, and we actually thought about the Klimavest, and this is a fund which is a so-called impact fund under the EU taxonomy, is so-called Article 9, so the most one on the upper scale, and it's only investing in renewables and infrastructure. So basically the intention of this fund is to make good to the environment. So everything we're going to do with investment has a positive impact in terms of CO2 emissions reduction, and this is basically something our clients can decide to opt in or not. We're basically trying to convert the entire company into an ESG-driven community, let's put it this way. I mean, you just mentioned that we're looking very much into our investment opportunities from an ESG perspective now. As I mentioned on Klimavest renewables, I think it's a bit more simple because it's basically water power, solar power, it's wind. So it's easier. It's just the availability of product is a limitation right now. For real estate, it's a bit more complicated because you have to convert an existing structure which has been built for the last 50 years and make it ESG compliant. And the mission is actually on the real estate side to become, or actually we are an Article 8 product, but to become more ESG in the future and to focus on all three topics. It's not only the E, it's the S and the G. We are quite often forgetting about the G, but without governance, the structure cannot actually work out, especially if it's an impact product. I just want to make one more point, which drives me personally. I mean, we're all talking about the S and the E, And if we're not good in improving the E, there's not going to be an S as well. Right now, more people are dying in Ukraine and Somalia than in Eastern Europe. And it's just because people are not simply able to live anymore on this planet. As you mentioned, it's close to your heart. It's the same for me. We as an industry have to work on it, and we have to find solutions how we basically can improve the overall world. Otherwise, there won't be a planet to live on. I think you have to claim it like that in a very strict message, because otherwise it doesn't get up in people's mind.
Okay, good. And that brings us to you, Sebastian, in a way. In terms of the regulatory one, we've already discussed a little bit about the kind of growing regulation and the impact on that. But I suppose, what are we seeing, particularly for Europe, in terms of regulation coming up? And I suppose, is that one of the key drivers, or is that also coming from the passion of everybody here, but also the institutional capital? Is it being driven by occupiers? What's your sense of that?
Maybe I just would do one step back and go where we started doing the ESG business at PwC, because it started something like 5.5 years ago when the first clients came and said, well, there is something coming on EU level. There is a plan on a sustainable future, and it has to be driven also from finance perspective. So we would like to think as a company, what does that mean for us? And our stakeholders are coming. It's the investors, the shareholders, it's suppliers and others, and saying, well, what are you doing to be a sustainable company? And what are you doing to deliver sustainable products? And do you have a sustainable product in your product portfolio that we could potentially invest in? And then they started thinking about, well, what could be our sustainability strategy, or let's put it ESG strategy, which with a focus on E at the beginning, but now coming also to as a G here at that point. And that was the beginning. So not so much the regulatory perspective, but more the perspective of the stakeholders who said, well, what is coming towards us? Yeah? It is, of course, always driven then by the regulatory environment, because they say, well, what does it mean for me? What does it mean for my assets? What does it mean for my business if I don't cover the sustainability topics? And that's actually something we found out in our ESG study. We did something like 2 years ago when we asked the market participants, what do you think will be the future of sustainable products? Yeah? Back then, most of them said, well, we think it is important to have one, but not only to have Article 8 or Article 9 funds, there will still be a place for Article 6 funds as well. But what we found out is that with the COVID pandemic in the last years, and now with the new, let's say, challenges with Eastern Europe and Russia, there's an acceleration in the mindset of the people who say, well, in the future, there's pretty much no more place for Article 6 products. Article 8 products will become the new normal, and will become the regular basis for new topics. Yeah? And as we see that, let's say some market or a lot of market participants wish that there will be also evolving of the regulatory environment, bringing more certainty on what are the requirements on an asset level, on a fund level, to be eligible to be Article 8 or Article 9 fund. Because then they have a better feeling in what they are doing, what they want to do, what they want to sell, and not having, let's say, in mind, is it critical from a regulatory perspective, from a legal perspective, to have, for example, an impact fund in Article 9, and then being blamed for greenwashing of products, with a lot of market participants are a little bit afraid of, because having a view on the asset level, there are already some funds that could be Article 9 or impact funds, and it's more or less the regulatory environment that just brings not enough certainty right at the moment to do the step towards the impact product and to bring it to the market in the future.
And is that one of the challenges that investors are seeing? You were obviously one of the first to do that, but do you think that's in some ways restricting, particularly on the real estate side? I mean, you kind of touched on that a little bit earlier.
Yeah, I mean, yeah. I mean, that it was driven actually by taxonomy a couple of years ago, and I think nobody really had a good understanding at that point of time what it would meant for the industry. Now, 3 years later, I think, as you mentioned, yeah, people have a good understanding of what taxonomy means, but not in every detail level. And it's still an ongoing process, so we will a lot of regulations coming up in the next years, and we're still on the investor side. Not forgetting about the corporate side, which is going to be released within the next 2 years. So basically, corporates will have to report on taxonomy as well. So an entire industry is going to change, and therefore I would say yes. From our investor side, there's a need for ESG compliant products. I would actually agree to say Article 8 is getting the new normal, and Article 9, and potentially there's something beyond. I don't know, but could be. Is becoming a bit more on the upper side, but it all has to work. And if you're on real estate, it's more complicated. People understand it, and for me, it's interesting to see whether impact products in real estate really have a bright future with the same, cash flow models behind as you would do on a Impact 8 product, and basically what products are available on the market. But let's see. I mean, the social taxonomy has been released, I think, last week. As a draft, could be an interesting element to define impact products for real estate for the future with a focus on the S. That might be a new type of product we're going to see evolving in the next years.
Okay, interesting. Let's pick up a little bit on, because obviously you're having to collaborate in some ways with both the cities, but also I suppose to actually the people who live in the cities. So how important is it that, I suppose, who led this? Were cities encouraged by what you were doing and the opportunities to do that? Has it been taken up by the drivers, if you like? And I suppose, are you beginning to already see some of the changes that you were hoping for?
Yes. No, but so we are a proposition which disrupts. So that means that it brings about a change of behavior. And I think it is us leading that change and making cities aware of the opportunity afforded to them. And I mean, without exception, where you are able to communicate directly, they are very happy with that opportunity, and yes, you need to make people aware of something they don't know. So there are lots of questions when you open up a garage. What about this? What about that? What about the tenants? And once people realize that we really manage that and manage the capacity in such a manner that it is smooth, it becomes the new norm. So we have to push our message out to cities, to tenants, to owners and other stakeholders. But we find that it is well received, and maybe on my impression here at MIPIM, it's my first MIPIM. Unlike for many of you, I understand, and I'm really impressed by how high on the agenda ESG is. So the way I perceive it, it's we had a discussion yesterday. It's not something which is just mentioned, but it's really something which is felt and lived. So that is very encouraging.
Yeah, I think it's been interesting to see also when looking at the big projects that are here, from Egypt, from Arabia, from that actually ESG is also a very important part of that. And that wasn't the case if I'm thinking back 5 years ago, certainly not 10 years ago. That was very much not the interesting part of it at all. There was no focus on that really. I wanted to just come to you in terms of, because you're obviously then in terms of the construction development side. So how are you managing to lower that? Presumably using new technology, different types of construction. So I suppose how can people ensure if they're looking to construct a new building that it's actually as effective as it can be at the moment in terms of lowering carbon? What are the things that you're doing?
There's a few examples, of course, and as you said, it's more difficult to implement this ESG aspect, being compliant with the buildings which are already built, than those which are up and running. Construction sites are up and running, or those which are in the pipeline, let's say. So for our most recent projects, we have implemented, as I have mentioned before, is a green concrete, for example. This is together with the Heidelberg, we have created the concrete, which is lowering the NOx emission produced by the diesel cars in the traffic on the street. So one of our projects has been, we tested it in one of our projects in Warsaw, Generation Park. And after we tested, and we invited also the city to take part in this exercise. And after that, the city decided to have 10 projects, which city is running, also with this green concrete. So this is the social impact, or the impact on the society, which we can have by using this persistence and also being innovative in that. Right now, we do this in basically all of our projects, so which are always located in the city centers, in well communicated from the public transportation, also from the cars, vehicles aspect. So we can commute easily, but also people are using a lot of cars, especially after the pandemic, when people get back a bit of, from the public transportation. So more cars on the street. So very much appreciated idea of lowering the number of cars on the streets and the emission of the CO2. So this is one aspect, the green concrete. Second is that we plan like 2 projects. One in Warsaw, the high-rise building. Actually, the building where we have the shelter for the refugees, which is existing one. It's called the former name of the building is Ilmet. It's in the city center ONZ roundabout. When we offered to the city the 450 beds, looking for more, working on it for the refugees. But this will be a building supposed to be demolished. We like put it up the post in it, trying to support also the city with this refugee crisis. And this building will be demolished, and all of the concrete will be created during the demolition. We want to reuse it, so rebuild it into the new projects which will be there. So that this is another way of recycling and lowering the emission or impact on the society. You don't need to produce it; you just reuse this. And also in Prague, we have the one project which we are planning to do with the timber construction. So it's going to be a completely different type of project, so net zero in terms of carbon emissions, so neutral building. So this is also something what we have in plan. So here and there we try to take a lesson learned from our colleagues from Nordics. Of course, the awareness of the society, the approach of the investors, of course, is much higher there. But we try to implement it into the Central Eastern Europe and put the bar, as I mentioned, even higher than we have now.
And it'd be interesting just to pick up, I think, on, I suppose, what are the main challenges that you've got at the moment? It'd be interesting just to see what you're seeing as a challenge, especially.
The main challenge is the speed with which we see our proposition rolled out at major real estate companies. And there's no particular reason. I think one, but reasons we see is that parking is not a responsibility of anyone in particular. So it sits somewhere between the board and the people actually at the operational level. So that means that in order to really get it going, you need to convince various stakeholders within a real estate company, and that would really be, let's say, a wish that we could get more, let's say, urgency at real estate partners for this agenda. And I would say that once people have been converted, so once they actually have connected their portfolio, they stay with us. So the churn, as they call it, of garages is extremely low. People come, check in, but they do not leave.
It's the Hotel California.
You know it. Indeed.
Yes, it'd be interesting just to come to you. I mean, there's obviously looking at the real estate side, there's a huge amount of existing stock that is not going to meet some of the criteria that Sebastian was talking about there. So, you know, how do we deal with that? Is that something where investors can just say, okay, well, I'm not interested in that. We'll transition some of them, but not others. I mean, is there a sort of duty of care in some ways, rather than just selling off the non-green ones to green your portfolio? You know, how do we deal with that as an industry, really?
Yeah, I mean, you just asked before what are the challenges, and this is, I would say, one of the top items. Like if we're talking about House Invest, it's going to be in this 50 years in 2022, and we want to continue the next 50 years. So there's an obligation to take care of generations and to make something which will still stand for the next 50 years. So I think it would not be a good solution just to sell off the products which you think are not compliant. And by the way, I don't think it's going to happen anyway, because other investors are looking into GS compliant products as well. So what you need to do is really get a good understanding of your portfolio. I'm always asked the question, how can you deal with 160 assets simultaneously? It's just simply not possible. So you have to find a way, what is the worst, what's the best property you have, and then you start working on it. And we are very much looking into opportunities such as the digitalization, like ParkBee, of course, is one of our clients, or we're using them, but we're also working with other companies which are working on the HVAC systems in existing building, and we're trying to improve what we have. Actually, I would say to buy some time for the next, let's say, 5 to 10 years, because you basically can improve a lot of the existing stock by at least 20 or 30% by adding a level of digitalization. Then when we ever have a chance to convert a building, we're trying to do the best as we can. So we're increasing actually our investment as we did before to make it more ESG compliant. And it's also kind of making it future proof if you want to sell it in 15 years. I mean, it's getting more narrow in the next years. And then we basically start to work on it. And I think we have to somehow accept that we cannot deliver everything at once, and there's a lot of complexity, and the solution is not only in real estate. A part of the solution is also in getting greener energy, and I think that's sometimes a misunderstanding. You can decrease the CO2 footprint, but you basically are running on the same primary energy as you did before, and that won't stop actually the heat islands in the city centers. So you have to work on a couple of levels. And CO2 can easily be reduced by adding PV or solar wind power. And that's also part of the mission. And now, as it's really accelerating in Europe, I mean, the goal in Germany has now dropped from 2045 to 2035. This will help a lot as well for real estate to improve. And last comment on this one, this is, I guess, a 100-year-old building. I think we have to accept there's a beauty in existing structures as well. I see a lot of great companies now popping up. They are just working on different ways of doing construction. So you actually could keep a lot of the existing structure, like the concrete, and then just by adding a level of digitalization and prefabrication again, add modules into the existing structure. And I think we will see a lot of new technology coming up, which will help us to transfer it and reduce our CO2 footprint. So I think it's always hard, to accept that you're in a current point of time where you don't see the solution, but in 10-year time, we will look back and say, wow, there's a lot that has been developed in the last 10 years, which will help the industry.
Yeah, there's a huge amount going on. I know that the PwC also have done a sort of prop tech map almost for some of these things as well. I mean, talk through that if that's an interesting topic, but also, I mean, it'd be interesting to get your perspective from being in the German market about whether or not you've seen significant change, whether things are really accelerating. And also, I suppose, I mean, we've seen an increase in interest from investors around life sciences, around healthcare, around senior care, student housing. So a lot of things that have a sort of S aspect to it as well. And is that something that's, I mean, certainly we've been seeing that in the UK a lot. Is that something that's also happening in Germany?
Yeah,
Actually, it is, but maybe just to add one last thing to what Jens Böhnlein just said. So it is actually the existing stock of buildings where the music currently plays. Because if you build new buildings, most of them with the certificates they get are environmental friendly and would fit into an at least Article 8 fund. But with all the existing stock, there is, let's say, the real impact you can have by optimizing the existing structure. And at least for Germany, the figure is that we would need at least double the refurbishment rate that we currently have on the market to reach the goals that we have in reduction of CO2 emissions and reduction of carbon footprint and in energy efficiency at that point. And I think what we need there is more incentives also for the industry to find solutions to get it better for the existing stock. But to what you said is what we currently see. So if you have an ESG strategy, most of the players still have focus on the E, but there are already players coming that will have also, I would say, also in focus on the S, not only S, but let's say a combination of S and environmental by putting, for example, retirement homes or elderly living or accompanied living in the portfolios. And actually, currently we see that this is also something the investors are looking for, especially with the demographic change we see around the globe, but especially in Europe and not Germany, that this is something that has to be built up and something that has to be also accelerated to meet the needs that we have in the future. I don't have the exact numbers in mind, but what we can see is that over the coming years there is a huge demand for such houses, and why not do the combination, doing let's say good for the environment, doing good for the society, and having let's say an attractive investment opportunity at the same time.
Okay, good. Ron, I just wanted to, any questions from you, and indeed any questions from anybody here. If anybody's got a question, now's the time to ask.
Yeah, happy to maybe also introduce the $1 million question, which is about valuation. And it reminds me to a previous meeting at Expo Real, also with Arkadiusz, because it was actually also a question like, do we see the benefits of our sustainability investments in our valuation models? So that's maybe also a nice question to the investor, like when we're investing in, well, outperformance in sustainability, do we also see it in valuation? And I think there's still a lack of understanding, also from valuation models, but also maybe going from a more linear economy to circular economy. So I'm really curious to hear your thoughts about this, and I appreciate especially the investor perspective.
Let's start with you.
Okay,
sorry. I'm here for a
Question
different question, but
Maybe to just add one topic, because it's not only, let's say, the valuation perspective, but also the risk perspective. And that is something
It's actually measurement, risk,
that's a fair
and
comment.
valuation.
That's exactly a fair comment. I actually wanted to say that as well. We are looking very much from a risk and opportunity perspective. So every new product which we're adding to the portfolio has to, underrun a risk assessment, and we're looking into it from a level whether it's going to be within the 1.5 degree pathway, whether it's going to be taxonomy compliant, if there are any potential risk, if you take taxonomy, if there's any harm of hazardous water and storm whatsoever. So that's a risk perspective. It has become even more important than it has been in the past. From a valuation perspective, I'm also sitting in the EMEA board of the RCS, which is very much focused on valuation. I think it's one of the major topics which are under discussion right now. I'm very certain that valuation will add an additional layer in terms of valuation to the properties in terms of ESG, but not only in terms whether it's ESG 8 or 9, it will go very much deeper into the asset, and you will have to demonstrate a lot of data which you would not have to demonstrate before. So that's actually one of our topics as well, where we're trying to collect as much data as we can from the building. And from a market perspective, I would say corporates, as I mentioned before, corporates will have to demonstrate that they are ESG compliant as well, because the employers will ask them to do so. So if you want to offer the best building, it has to be an ESG compliant building. Otherwise, you won't let it to a highest market price. And that automatically will kind of divert whether you're on the upper side of the valuation or on the lower side. For us as investors, we are looking into that topic very specifically. We have set up our own tool, so we have kind of analysis running on every asset we want to acquire in comparison to what we already have on the fund, and then we take a decision whether it fits or not, and this is an additional layer to the commercial aspect.
And also, do you see a rewarding on the social aspect, like when you're investing, let's call it the mobility perspective, because it should be, that's also an interesting part when we discuss it in the impact journal, that we see crossovers between the real assets and also infrastructure. And so, but I think it's one of the main topics is to clarify how we leverage on when we are investing, for example, in the infrastructure or on the social perspective of a, well, let's call it a city. Do you see an upside then on the revenue side or on the valuation side? And I think there's still a lack of understanding, but also happy to hear your thoughts.
A very happy question, that is, because I explained to you what we are doing, and we are bringing income, so we actually add to the yield and therewith to the result on divestiture. So that's really a happy question. The social aspect you touch upon, that's more indirect. But I think it is very real at the same time. So we did an experiment some years ago for a number of months to make a certain street in Amsterdam completely car-free and replace it with bushes and a playground actually. And what was reported in the evaluation after that period was that people interacted more. And so if you have these typical narrow streets in European cities with cars on two sides, that actually impedes social interaction. And it is a softer point, but it is very high on the agenda of cities. And so, and I think it's there for a reason. And so we are happy in a roundabout way to contribute to that.
But was there additional cash flow from the government afterwards? Because it should be, there should
well,
be
I don't think the government,
a social business case,
yeah.
Because otherwise it's only an asset-driven investment.
I think you know and we know that cities are not driven by cash flow. They rather spend it. So that's not the measure, but they really value social improvement, and especially where that is in the fabric of where we live, the street, where you actually know the people in your street, really adds value, which I don't think you can measure in terms of cash. But we again, we like to measure our performance in garages in terms of cash, very much so. So that is a substantial contribution to valuation.
Yeah. I can build on this a bit on the social aspect. What we do and how we can contribute to the social and transfer and monetize it, a bit similar case to this what has been said. We do a social consultations on, for example, for the retail areas with the local communities. So we discuss with them, we're dragging them into discussion what they would like to have in our projects, and this is how we can contribute. So by contributing or designing the projects according to the local society needs, you can indirectly positively influence, for example, on the performance on the retailers on the ground floor of office buildings, the proper mix of the services, which keeps them like producing the income or being more profitable, paying the rent and so on. So this is the indirect social impact on that. Of course, the placemaking, all the aspects related to the increasing the comfort of living in the direct neighborhood. So this is an aspect how we can monetize or transfer this into the profit. I have one more comment. Just looking at this panel discussion, which is approaching that, as I understand, which popped in my head. Because ESG also is about diversity and inclusion. it seems that ESG topic is very much male dominated, I would say. So I would love to see for the future more women taking part in the panel. So maybe also an aspect for social contribution to our discussions.
Yeah, and it's a really interesting point actually, because one of the things about MIPIM this year is that it's much more male heavy than it has been, and it's much more male heavy than Expo Real was, interestingly, which means that in fact most of the female speakers, because we do work with, you know, diversity talks, real estate, and it's very rare for us to have an all-male panel, for example, but that's been almost impossible to achieve. We've achieved it for the majority of panels, but it's been, you know, I don't think we've had an all-male panel for quite some time. So it's interesting. It's interesting to see.
It's an observation.
No, but it is an interesting observation that there are less. I haven't been out in the closet or inside to see whether or not that's noticeable in terms of the audience, but it's certainly been noticeable in terms of the availability of female speakers. Anyway, here at MIPIM. So just an interesting note on that one. Good to just wrap, I think, on, let's say we're back again at Expo Real or MIPIM next year. What's your big aim? So let's say on a positive note, what do we want to have achieved by then? So that's a 10-second one.
Personally, I would like...
You can do 15 seconds.
15 seconds, okay. Two topics, of course. One big one is Ukraine. I would like to have this finished, and I think we would like to see peace there. And I think this is it will be the biggest achievement of this time where we're living it now, and we'll really be focused on the business and looking forward how we can develop the industry further. And of course, in terms of the ESG, it's great to see a lot of activities and increased awareness among the occupiers, investors, banks, and really we're pleased being part of the real estate and really leading a developer providing with the ESG compliant buildings. So it's great from this perspective.
Great.
I wish for better will, but I mean more specifically business related. We are looking to expand throughout Europe. So borders are relatively meaningless in view of the ability of tech to deliver. So we're really looking to scale with real estate investors throughout Europe. So I would really challenge you to think what it may mean to you. We're very happy to point it out. And I would hope next year that we would be able to report that we have added a number of countries to the current 6 we're active in. So my wish.
Great, yes.
Thank you. Well, we've actually said that we want to become a more sustainable company than before. It's one of the strategic columns. So this requires a lot of change in our organization. So I think one of my main goals is actually to get as many people as I can in Commerz Real on board to drive the mission and be part of it. Because one man or woman can't do it on their own. It's important that everybody has a good understanding of the mission, and we're trying to actually bring out our first ESG report to hopefully Expo this year. So there's a lot of work now feeding into this, and this is one of the, let's say, operational goals, and it will be very important for us to do so.
Great. Well, I look forward to seeing it at Expo. Sebastian.
I totally agree to what you said, and I would also love to see that the conflict in Ukraine ends very fast. But what I also would hope for the future is that especially the governments learn from our dependency on, for example, Russian resources in the past, and that we use what we just learned as an accelerator for the ESG movement and for a drive to a more sustainable energy production, especially in Germany, and that the regulatory framework that we have right at the moment will be transferred to be more friendly for investors, for fund companies, to have, let's say, an environment where they can achieve the goals that they currently have for their products, and that we will have the meeting on the next MIPIM where we say, well, the world has become a better place for all the people, peace, and with let's say, more sustainable products that can be achieved easier, and let's make the world a better place there.
Excellent. And we'll certainly try to do that with the editorial board at Impact as well, because I think there's some really interesting areas there that we can pick up on. What's been interesting for me as well is just how much ESG, and that includes as well the social impact side, the S side of it as well, is now in all of the conversations about everything that we're doing. So it was a large part of the debt and financing discussion, for example, around green financing. We've got logistics today coming up. It will be a big part of that discussion as well, because there's a lot of movement in terms of the logistics side, whereas 2 years ago nobody was talking about ESG related to logistics for certain. So it's interesting to see how that's now in almost every discussion here. Thanks very much for your time today. And thank you to the speakers. And the joy of us all being here is we can actually applaud and say, well done everybody, well done.